Good afternoon, good afternoon, good afternoon. Sorry that I'm late, but I was updating my picture. If you notice, have an addition to the studio right here. We got an addition to the studio right here. I'm typing in, go to YouTube on my IG for anybody who might pull up on IG. Go to YouTube. We will be talking about that one mistake, that one big mistake that every trader makes. That one big mistake that every trader makes. Good afternoon, good afternoon, good afternoon, everybody. I appreciate y'all for tuning in. You see it, baby. You see it, baby. You see it? Do you see it? That's what I was doing. I was doing that. If y'all on IG, come to YouTube so you can see what I'm talking about. Y'all know I'm silly. Y'all know I'm silly, man. Let me see what we talking about today, man. Today we are talking. Let's see what we are talking about. We are talking about that one big mistake traders make. That one big mistake that traders make. For those who like for the video to get right to the nitty gritty, the one big mistake that traders make is not understanding that it's all about the draw. That's it. It ain't nothing fancy. It ain't nothing super insightful. Not understanding that it's all about the draw is the one big mistake every trader makes. Now, I'm going to go into other detail. Bear with me because I don't sit down and script anything out when I be doing these lives like this. I have an idea and then I just talk, because when I sit down and write notes, I keep stopping and reading the notes, and then it gets real awkward because I'm trying to find, it's like I'm trying to find this place on the notes what I was just talking about, and then I can't find a place on the notes what I was talking about because of my handwriting look like chicken scratch, and it gets really awkward. So I just kind of freestyle it. Speak. My light is dead, so I don't have my side light. I don't have my side light. I didn't plug it up the last time I used it. There you go. I didn't plug it up the last time I used it, so it's dead. My hair light is there though. Okay, sorry for that. Sorry about that. So, let's see who up in here. I already gave you the goods, so it's not clickbait. I already told you what's the one big mistake that traders make, so it's not clickbait. Thank you. Now let's see who in here. Then we're gonna get into details. Here, learn to share, of course. Michelle Tucker, of course. Will, Rhonda, of course. Deborah, of course. Lil Hulk. I know my sweetie was in here. KC, what's up? Besties. Black Al Davis. Robson. Tim on the wrong side of that picture. He still Angela, Gabriel, Taryn. What's up, man? What's up, everybody? How y'all doing, man? Hey, man, let's get to it. Let's go into the dirty deets, right? Now, Tim, what do you mean when you say the one big mistake that traders make is not understanding it's all about the draw, right? Well, this is what I mean, right? No, let's back that up. The one big mistake all traders make is looking for that one thing. Looking for that one thing that's going to do it for them. That's the one big mistake. So forget everything I said prior to that. Pretend like you just started watching the video, and I'm going to say, hey, today we're talking about that one big mistake that traders make. And what that one big mistake is, looking for that one thing that's going to make everything work out for them. That's what we're talking about today, right? I just got it. I just got it. And it's hot too. We talked about that. We talked about that before already. We talked about the yellow spiders the other day. If you are a true gang member, if you are a true gang member, you had yellow spiders the other day. If you didn't have a yellow spider when I talked about the yellow spiders, hey, so looking for that one thing that's going to change everything for them, right? That's it. I got it. Now, let's go over here and talk about we're going to we're going to caution tape spiders. I'm going to close the chat so I don't get distracted. We're going to add in the first thing I said, right? Not understanding it's all about the draw. We're going to add that as a supplemental ingredient to the one big mistake. We're going to add that in as a supplemental, extra learning, teaching, if you will. So let's go over here and open up Trading View. Right? Let's go over here and open up Trading View. And okay, I'm back. Oh, wait, no, I'm still glitching. Okay. It's glitching a little bit. Trading View got it going crazy. Trading View got it going dumb, dibby, dumb. Trading View got it going crazy. Okay, these are 5-minute charts. Let's go up to a 1 hour. Give us a little bit of room. Right? Squanch it up. Let's squanch it up. Squanch it up. Okay. Now that we squanching this up, I know you probably like, Tim, you squanching it up too much. I can't even see the PD arrays. That was on purpose. What did I just say? The one mistake. Oh, where's my picture? What did I just say? The one mistake that traders make is looking for that one thing that's going to make it all better. That's the, get out of here. That's the one mistake. Trying to look for that one thing that's going to make it all better. It's not about that one thing, right? What we got to realize is, now, side note, if you do not trade ICT concepts, if you do not like ICT concepts, if you think ICT concepts are the devil, if you got any ill will about people who talk about ICT concepts or use them, the door is right over there. You're welcome to leave. I'm here to express things in my humble opinion, and the things I choose to use on a day-to-day basis are ICT concepts. So if you hear me talk about ICT concepts and you don't like it, okay, now that that's out of the way, get it through your mind, no matter if you are a day trader, a swing trader, or a long-term investor, get it through your mind right now that it's all about the draw. Right? Let's go to the type tool, the type tool. right? One, get it through your mind. It's all about, dog it. This new keyboard be driving me crazy. Liquidity. It's all about the draw on liquidity, right? Get that through your mind right now. It's all about the draw on liquidity. Where is price trying to get to? No matter what you feel, to ignore your, come here, ignore your feelings and your wants, right? Ignore your feelings and your wants. The market cares nothing about your feelings, right? It's all about the draw, right? Forget what Uncle Tony and Auntie Barbara told you about buying pressure, selling pressure, bulls and bears, you know what I'm saying? Mannequin body parts, trend lines, indicators, stochastics, exponentials, simples, anything that anybody told you about how to predict the move or forget about all of that, right? There is something called an algorithm that exists in trading, and it completely controls everything dealing with these markets. I don't care how many times people get on Al Gore's internet or on the television broadcast networks and say, oh, Apple's doing this. Oh, Microsoft doing that. Oh, Bill Gates said, oh, Jeff Bezos said, oh, I don't care how, oh, Jerome Powell is talking about, oh, and I don't care. There is an algorithm that controls these markets. If it was not an algorithm that controlled these markets, this simple dude from Fort Lauderdale, Florida could not do what I do on a daily basis. You know why? Because I don't look at all of that garbage. I don't know what they're saying. But people come into the group and witness me talking about what I anticipate the market to do, and we see it play out time and time again. Do I get it right every time? No, but I get it right a lot of times. Why? Because I submitted to the fact that there is an algorithm out there, and I submitted to the teachings of Michael J. Huddleston, and I didn't buck against it, even though you couldn't tell me that 5 touches of a level wasn't where it was supposed to be. You couldn't tell me if it touched this trend line 3 times, it wasn't going to do this. You couldn't tell me if the RSI hit 70, it was overbought. If it hit 30, it was oversold. And you couldn't tell me this stuff. Wasn't true. But then when I started learning about this algorithm, and I said, you know what? That makes perfect sense. Now, this other stuff has always been vague, and I always felt like I was gambling or I was guessing, but this makes perfect sense. And so I stopped watching all that other stuff. The only thing I do is I go to my economic calendar, right? I go to my economic calendar. Well, Tim, you said you don't list this stuff. Why are you going to your calendar? I go to my economic calendar. You can go to Forex Factor, you go to Econo Day, and I pull up the calendar and I look to see, because I am a day trader. I am a day trader. So for a day trader, the intraday activity is important to me. What they're talking about, I could care less. I go to look and see, oh, we got GDP on Thursday at 8:30. So Thursday at 8:30, I'm looking at how the algo is going to use this news to manipulate the market in its purpose, of its overall purpose. That's the only reason why I check my economic calendar. So I'm going to get back to the one mistake. I'm just ranting right now. So with the fact that I don't watch the news, with the fact that I could care less what the numbers are, with the fact that all of this stuff, and I only look at the price and what it's doing, if there was no algorithm, this little simple boy from Fort Lauderdale, Florida, could not do what I do every day, because I'm missing a whole big important piece of the puzzle. Now, don't get me wrong. The economic status of the world and all of that, that's important to our daily lives. That's important to my daily life. So I keep an ear to the street of what's going on in totality. But when it comes to trading, I could care less. Why? Because the market is ran by an algorithm that uses all of the knowledge it has about us and everything we've been taught in the retail world against us. Now, let's go back to that one thing. What we gonna do right here, I just decided on it because I'm looking at the chart right here. Right? I'm looking at the chart right here, and we gonna go back and we gonna talk about the OG Henny loaf. Who, if I'm gonna open the chat back up, right? If you were in, if you was in S2F back in 2021, or if you knew something about ICT in 2021, put a 1 in the chat if you remember how crazy everybody went, including myself, how crazy everybody went when ICT dropped OTE, optimal trade entry, right? When he dropped, I ain't gonna say when he dropped it, but when optimum trade entry was all the rage in England. Drop a 1 in the chat if you was either in S2F in 2021 or if you knew about ICT in 2021 and how everybody went crazy over OTE. Matter of fact, it's somebody in the gang right now that still trade OTE to this day. Ain't nothing wrong with OTE. Ain't nothing wrong with any ICT concept, but we talking about individuals who look for that one thing that's going to change their life. Now let's get to it. I see some ones in the chat. I see some ones in the chat. I see some ones in the chat. I got heard about it. I see some ones in the chat. I see a whole S2F in the chat. Some people don't know, some people don't know how to follow follow instructions. I ain't gonna call no names, but some people don't know how to follow instructions. I don't know why them names keep popping up on the stream, but some people can't follow instructions. I don't know what that's about. Got some ones in the chat. Got some ones in the chat. Now, let's talk about OTE. Now, replace OTE with any ICT concept that you may trade. Now, the one mistake that we make is looking for that one thing. The one big mistake that traders make is looking for that one thing that's going to change everything, right? What did I say? It's not about that one thing. It's all about the draw on liquidity, right? That's what you got to know. No matter what you trade, OTE, order blocks, fair value gaps, whatever you trade, it's all about the draw on liquidity, right? Now, the reason why I say the mistake is looking for that one thing, because not only with ICT concepts, with anything that you study or want to use, if you don't understand the entire process, taking a piece of it out is detrimental. It's the same thing. And I can only speak in terms of stuff that I understand. So if you're not a Christian, or if you don't believe in Christ, or you don't believe in the Bible, I don't want to offend you. It's over there, right? But when it comes to the Bible, right? The old people that I grew up around used to call it you trying to quit, what they call it, quilt break. They say quilt blanket scriptures or quilt, what, I can't remember exactly how they said it, but like, you know, when you look at them old quilt blankets that the people used to make, and it had a patch of an old piece of blanket, then another patch, then another patch, because they weren't throwing nothing away back in the day. These blankets tear up, they just gonna make one new blanket out of all the other tore up blankets, right? And so they put, you know what I'm saying, and now you got this blanket with a red patch, a blue patch, a yellow patch, a purple patch. It's just, you know what I'm saying, a patched up blanket, right? So when you read in the Bible, if you don't read the entire thing, and if you don't understand how to look at, you know what I'm saying, this book, and when it make reference back to this book, especially like in the book of Hebrews, they make reference to a lot of older scriptures. So if you don't understand those older scriptures that they're referencing, you're going to miss the point that that the writer's trying to get across, because you don't understand everything in totality. You drop it in Hebrews, but you done missed all the stuff that Daniel talked about. You missed all the stuff that, you know what I'm saying, Elijah talked about. You missed all the stuff that all these old prophets talked about. So when they talk about it over here, you like, but what are you talking about? What's going on? It's the same way when it comes to trade and ICT concepts. You ain't looked at none of the core content, but you hear him talking about OTE, and then you like, oh man, I wanna trade OTE, right? So for those who don't know what OTE is, right? We're gonna leave this up here because that's an important piece. We're gonna leave it there. We're gonna let him chillax over there, right? So for those who don't know what OTE is, OTE stands for, OTE equals optimum trade entry, right? OTE stands for optimum trade entry. That's what OTE stands for, right? Optimum trade entry, and it occurs. Occurs got one C or two. One. I don't know. Spell check it. Hey, I can't ask Siri. Somebody spell occurs. I don't know how to spell occurs. Oh, I put A instead of O. Thank you, Michelle. I put an A instead of O. It occurs at fib retracements. Fib retracements. I dog it. Of, let's just go say, we're gonna say around 62, 70, and 79. Right? Roughly around those. Right? Now, this is where people go slap wrong, right? People see this and say, OTE, it occurs for fibs around this, this, and then they run out there, they grab a Fibonacci tool, and they just slap it on any low and any high, right? Like I just randomly picked a low and a high right there. Let me set this to OTE. Set this to OTE. Let me stretch it out. Extend it to the right. Hit OK. Right. And then we're just going to come here and say, oh, look, it came down and it hit the OTE, and then it started going up, but then it came and stopped me out. OTE doesn't work. Remember what we said back over here? It's all about the draw. At this point in time, when you're looking, when the price rallied up here and you're looking for an OTE entry there, you're just randomly picking a low and a high and just trying to jump in just because it hit the 62, 70, or 79% on the fib. You're relying on the fib instead of understanding the totality of the concepts. If you understand it's all about the draw, and you know what the draw on liquidity is, and you understand that the market is in a sale program, and you understand that we still haven't reached our destination of the lows. When the big boys got short up here, when I say the big boys, I'm talking about the algorithm. When the algorithm let the institutions get short up here, when the algos buy in a premium, right? And they are doing what? Once they get up here, they are accumulating short positions. How do you know that? Because once we got above this high, we broke structure to the downside right here. We expect ICT has a whole thing about accumulation, expansion, all. If you in the beginning of the core content, in the beginning of the core content, he telling you everything you need to know. Bottom line up front, everything you need to know, but it's not dressed up in the first month of the core content. He telling you everything you need to know about trading, but it's not dressed up in fancy PD arrays or entry models or OTEs or silver bullets or thank God it's Fridays or event horizons, or it's not dressed up in no pretty name so everybody overlook it, right? But if you understand the draw on liquidity, you understand when to what we've been talking about in the last few videos. When to pull out the tool. When to pull out the tool, right? You pull out the Fibonacci tool when the market tips its hand that it's time for you to pull out this tool so that you can have a visual representation of the retracement where you want to get long or short. I gotta sneeze. Great googly moogly. I do gotta sneeze. It went away. Okay, so now that I did all that ranting, right? Let's give them something to learn about. So we talk about OTE. We're gonna stick with OTE, right? So now, looking at price, let's see what price did. These are hourly candles. I'm squanching it up because it's all about the draw. Who cares about the PD arrays that's in there? We ain't looking at no PD arrays. We sticking straight OTE. So we got the candle squanched up, right? Now, it's all about the draw. We already said we came up here. The algo accumulated shorts. This break in market structure right there, right here. Let me put on my fancy dancing. God dog it. My fancy dancing not on. Hold on, my fancy dancing not turned on. Did my computer turn off? Why my cursor highlighter not on? Did my computer turn off or something? Did I have to turn my computer off? That right there was so funny to me. This right here was so funny to me. Almighty Creator, take this sacrificial virgin as a oh my God, that was hilarious to me. That was hilarious. Where's my Where's my Hey, man. Wait, man. Why is this not showing up? Man, where my thing go, man? I'm really getting pissed off right now. I'm really getting upset right now. Where my cursor highlight go? I know y'all probably don't care, but I care for real right now. I'm trying to figure out where my stuff went, man. I'm trying to figure out where my stuff went, man. Why my stuff ain't showing up like it's supposed to? I mean, if I spelled it right. Cursor highlighter right there. It's in the downloads folder. What just happened? What just happened? Where'd all my things go? Why did they disappear like that? What is going on? Man, what in the now? I'm not mad anymore. Thank you for sticking around through my frustration. Now, what was I saying? Oh, yeah. Over here, we accumulated short positions right there because when we broke here, that breaking market structure right there, boom, right? That breaking market structure right there, that let us know that price was now wanting to go down, right? Price was wanting to go down. Why? We came up, right? We took off, we came up here, took out this buy side, pulled back, called that a little retracement, came up, took out this buy side and rejected. See how we see this long wick right here? See how we rejected off of that right there? This is all stuff that these are all tools you got to apply when you're trying to use your OTE. This is all stuff you got to watch, right? Because you got to know which low and high to anchor your Fibonacci's to, right? So, right, we've got a break in market structure there, right there, right? So now price is ready to go down, right? Price is ready to go down, right? So now, all right, price is ready to go down. So now we come down here, breaking market structure, right? Push back up, right? Come back up into that breaker right there, right? Coming to that breaker right there. See a little poke through, coming to that breaker right there. And then we go, right? Then we go. We come into that breaker and then we go, right? Now, if you're trying to apply OTE, right? If you're trying to apply OTE, right? you have to understand how price moves, right? You do not want to just randomly pick any low or high to anchor your fib to. And for anybody who don't know how OTE works, right? The way OTE works is, right? You run the Fibonacci tool, right? If you're bearish, you go from the high down to the low, right? Go from a high to a low, right? In that price range, right? And then the 62, 70, the 62, the 70, and the 70.9 area, that's the optimum trade entry, right? If you're going long, you go from the low to the high because you want to sell in a premium, but you want to buy in a discount. So we go from the high to the low so that when it comes back down into the discount, you're buying, right? And then you go from the low to the high, right? And then, but if you're selling, you go from the high to the low. So when it comes back into the premium, you're selling, right? And make sure I said that right. If you're going short, you pull it in the direction you want to go. So you start on the high and you pull it down because you want to sell, you want to go down. When it comes back up to the premium in the OTE area, that's when you fire. If you're bullish, you want to pull it in the direction so you go from the low up to the high. And that I just got it over here because you will pull it to a high. And then when it comes back down into the discount, you buy. Right? So what we want to look at is, right? We're going to go. All right. We're going to go like this right here. Right? So why are you going there, Tim? Because this is the game you play. This is how you play with price. Now, right? So once price has shown you that it wants to go lower, right? You want to trade OTE. Once price has shown you that it wants to go lower, right? We got the breaking market structure here. We got the breaker right there. When price comes back into the breaker, you're not a breaker trader. So once price comes back into the breaker, right, and it sells off, giving you another breaking market structure, right? That's when you start to perk up, right? So now, here we go. This is where understanding how price moves comes into play. Right now, looking at this right here, from this run to there, right? From this run to there, this is the mistake I used to make when I first started trading. One, I didn't understand what highs and lows I was supposed to anchor it to. So looking at this run, right, I would look at this entire move. Let me hide this for a second so we can see what I'm talking about. Right, I would look at this entire move now. Price has come down, showing me a willingness to break in market structure, and it's come back up, hit it, and it dropped. Right, it made a move dropping down. I would look at this entire move from this high to this low right there and be like, oh, I'm going to try to get an OTE off of that. Right. And then I would go in there and I would run my fib tools, right? And then I would get so upset because I'd be like, man, it didn't even come back to equilibrium. It didn't even come pick me up. I got left at the bus stop, right? But guess what? That's because I'm just picking a high and a low with very limited information. Right, I'm only picking it off yes, it's very good information because I did wait for the breaking structure. I did wait for the retracement back up to here, right? I did wait for it to break lower, right? That's all good and well. But what did I do wrong? I picked the wrong high and low. How did I pick the wrong high and low to anchor it to? Because, right, I failed to realize that this long wick right here, that super long wick right there, that wick just was going up there and doing damage, right? It went back up to here just to do damage. Because if you look here, when we broke down, what is this? Sell side, buy side, sell side, buy side, sell side, buy side. This said buy side, left, right? Sell side, buy side, sell side, buy side, left, right? So now all of this right here is what? A balanced price range, right? So this right here, this wick was just doing damage. The algo doesn't need to go back up there anymore. There's no need to go. It just went up there to do damage. What did it go up there to do damage on? Anybody that got short here? Anybody that got short here? Anybody that got short here? Anybody? It be dirty like that. It wicked up there to do damage on anybody. It does stuff like that, right? And then once it dropped, right? Once you got that balanced price range, if you come to the area after the balanced price range, right? Come to the high. You can even go to the one that left. But if you come to that high right there from the balanced price range, where the price come back to right there? Right there at OTE. Right there at OTE. Right? Is that a fluke? No, it ain't a fluke. It's just about understanding how to read the price. Right? Knowing which, if you just randomly pick a low and a high, sometimes you will be right, but you're gambling. But when you use the tool based off of the knowledge of all the concepts, you not only will be right more times than not, but you have valid data to go back and research and be like, oh, that's why I missed it that time. Oh, that's how I learned that I was looking at the wrong, I was getting left at the bus stop because I was discounting all of the balanced price ranges, right? But the balanced price range is not a PDA. It's just understanding price. It ain't fancy. So a lot of us overlook it, right? Let's go to the other side. Let's go to the other side of the spectrum, right? Let's go down to the other side of the spectrum, right? Let's come over here and say, okay, we got down here. Now, Tim, we've gotten to the bottom. Fibonacci tool, get over here out of my way, right? Let me flip you around because we're going to be going bullish this time, right? So, Tim, we've got down here, right? And we accumulated shorts here. We came down, we got below these lows right there, and it looks like we offset our shorts for some long positions. Why does it look like that? Because this right here, right? This expansion, aka what do we call the expansion when it has displacement like this right here, right? Somebody just tell me what we call this expansion with heavy displacement like this right here. This one here, and excuse me, and this one over here, the first one we'll talk about. Somebody put in the chat for me, what do we call this when we have this expansion with heavy displacement like this, right? And what's displacement? When the algo sucked up a lot of money from big hedge funds. When the algo sucked up big money from the hedge funds, right? And we got us a right? We get this expansion with heavy displacement, right? And so we got this expansion with heavy displacement right here, right? And we got a break in market structure right there. My battery getting low over there, right? We got a break in market structure right there, right? So now we're looking at our break in market structure here. Come here, line, Ray, whatever you call them. We got us a break in market structure here, right? That's our break in market structure, right? Right there, we got us a breaker right there. That's a breaker. Why is that a breaker? Because we got a low there, a high there, a low there, and then we got a ping, and it's gone. So that's a breaker right there, right? Price comes back down into that breaker. Remember, you're not a breaker trader. You're an OTE trader. So you're waiting for price to let you know that it's time to go. So once price validates to you, it's time to go. Now you start looking for your OTE, right? So now let us go and look. Let us go and see, right? So here we go right here. Price hits the breaker, right? And we go up. Nothing can stop me. I'm all the way up. We go up. It hit our breaker and we go up, right? So now if we get our Fibonacci tool after our breaking market structure, after coming back down, retracing back down into this expansion and leaving, right? But Tim, it's still a fair value gap down here. You know what the algo told us when it came back to this breaker and it left again, breaking this high right here, it left again. It's telling us, forget you, punk. You're going to be a breakaway gap. I don't want to come back down there right now, punk. That's what the algo is saying. When we broke structure, we broke structure with this expansion, retrace back down into that expansion, hit this breaker, and took off again like this right here. It's saying, forget you, punk, to this right here. So then we come here, right? Anchor there, right? Come up, right? Come up. We come up, right? It starts when we take off. So we just gonna use that high right there, right? That high right there, we come back down. We did not get OTE. We're not worried. We're OTE traders. Right here, we did not get OTE, right? We're not worried at all. We're OTE traders. It went up and it made another high. You know what you do in that case? Leave that anchor there and you move to that high. And then guess what? Guess what happened? It came back down and it came to OTE, right? It went, Tim, I missed it. It came back again. But Tim, I missed it. Sucks for you. You should have pulled the trigger. That was your goal, right? But you have to have the background knowledge of when to pull out the tool. You don't just pull out the tool just because the candles are printing. Remember what we said over here? It's all about the draw. It's all about the draw. So when the market confirms the draw for you, how is it confirming the draw? Right? With a breaking market structure, right? Now it's letting you know I'm looking for something up here. I'm headed towards something up here. That's where I'm trying to go, right? What's the simplest way to try to find it? The simplest way I try to find it, when you reject off of liquidity, whatever high or low sent you there, that's now the draw. That's the simplest way I do it. I keep it simple. Kiss. I keep it simple, stupid. Right? So once we get that pie out, once the market comes back, now we're not looking for the OTE off the pie out. You can get an OTE off of pie out. You can. But we're not looking for the OTE off the pie out. Right? Off the pie out, you can look for a breaker. You can look for a fair value gap. You can look for an order block, right? Breaker, fair value gap, order block. You can look for any of those, right? But if you really want to master OTE, right? Let the market show you for a fact, I'm ready to let it confirm. This is telling you I'm ready to go. This retracement back into the pang into the expansion, and then leaving it again, that's the confirmation that I'm ready to go. That's when you start looking for your OTE, because you don't need, it don't matter what's here. It don't matter. It don't matter if it's a breaker there, a fair value gap there. It ain't got to be nothing there. What's there? What's right here? It ain't nothing right there. The first time it came down, it filled the imbalance right there. Remember when I said it came down to equilibrium, it filled the imbalance. But this time when it came down, what's right there? Nothing but OTE. Nothing but OTE, right? You don't have to worry about looking for any PD arrays if you understand what the draw on liquidity is. If you understand what the draw on liquidity is. And the one mistake all traders make is looking for that one thing that's gonna make a difference. And they go out there and try to use it without all of the background information of what makes this one thing like OTE, what makes OTE valid. All of the stuff you got to understand about where price is trying to get to. Then you notice that I pulled out the Fibonacci tool was the very last thing I did. I watched price. I observed that we broke lower. In this case, we broke higher. I watched price and observed that we retraced back into the expansion area. I watched price confirm that, yes, I don't want to go any lower than that. I'm done with this area down here, right? We watched price. We watched price do all that, right? We watched price do all of that, right? Price came back down into this breaker. If you go back to the lowest of the low, right? It came back down into the breaker, didn't even make it back to equilibrium. It didn't even make it back to equilibrium of the entire move. It came and stopped at the breaker. That's your confirmation that price really don't want to go down there no more, right? It really don't want to go down there no more. So once it leaves there, now you can confidently start looking for OTE entries because you know price. If price gave you this confirmation that it don't want to go down there, price will not take that low out. If price takes that low out, you were wrong. You were wrong. If price takes this low out, you were wrong. If price takes this low out, you were wrong based off of a time frame higher than what you're looking at, right? So you have to understand the draw. It's all about the draw, and your draw is going to come from the higher time frames. Another problem that people have, I'm done with that, and I just want to put this out here just as like a pro tip, right? People run away from lower time frames. You hear fantastic traders who tell you, man, stay off them lower time frames, stay off the 1 minute, stay off the. If you truly understand the draw, right? If you are a day trader and you truly understand the draw, the lower time frames will give you more opportunities to trade without sitting in front of your chart all day. It's not guaranteed that you're going to get a one-hitter quitter, but it will give you more opportunities to trade sooner, because when you see it start to play out on the higher time frames, it's been happening on the lower time frames for a while now. So if you understand the draw on liquidity, don't be afraid of the lower time frames. Just understand you cannot make trading decisions based off the lower time frames. You can only make entry decisions, right? The decision of the trade and the draw and the stop, all of that has to coincide with the higher time frame bias. You can't go into just randomly trading somewhere. Now, for example, if these were 1 minute candles, right? And you had all of this downside risk right here on a 1 minute chart, right? You absolutely have to take in account that if this is a 1-minute chart, but there's a hourly breaker down here somewhere, you absolutely got to account for that hourly breaker down there with your stop, or you may be in for a rude awakening, because you can't make the trade decisions based off the lower time frames. The decisions have to be made off the higher time frame, but you can tailor your entry on the lower time frame to lower your risk. That's a conversation for another day. That's all I got. I appreciate y'all for hanging out with me. That's 55 minutes. Let me see what we talk about in the chat. Saw the Pioneer. Is there a benefit of OTE traders versus breaker traders? I thought breaker was more definite direction. Does OTE give? There is no such thing as a better entry model. One entry model is not better than the other, right? And when I say entry model, I mean like what strategy you decide to deploy. If you trade breakers, if you trade fair value gaps, if you trade OTE, if you trade order blocks, if you trade turtle soup, if you trade if you try, I said OTE, if you trade whatever you trade, there's no one thing that's better than the other. Anything you trade, it's all about the draw on liquidity. If you understand the draw on liquidity, right, the market will eventually give your setup an opportunity. The problem that we fall into as traders is we want to be in every move. We want to find the best setup. I said this in the beginning. We're looking for that one thing. We're looking for that one thing that's going to make everything better. There's no such thing as one thing that's going to make everything better. It's all about the draw on liquidity. And once you understand where price is trying to go, then you start looking for, ICT call it your multiplier. You start looking for your multiplier, right? So over here, if you trade breakers, that was your entry. If you trade breakers plus fair value gaps, that was your entry. If you trade fair value gaps, that was your entry, right? What do you have to account for? This downside risk right here. If you trade fair value gaps, you have to let's blow this up a little bit. Let's talk about it, right? Right here. If you trade fair value gaps, right? This is your entry there. What do you have to account for? Right? This fair value gap here. So your stop has to be at least below that fair value gap right there. Right? If you trade fair value gaps, it has to be at least below that fair value gap right there. And if you really want to be safe, your stop has to be below that low right there. That's being ultra safe, right? I'm gonna do this right here. All right. So, hey, Michelle, get off my screen. So, if you trade fair value gaps, this is your entry right here. After this pang out, come back. That's your entry. This is your mandatory stop because you have to account for this downside right here. This is your safe stop below that low. If you trade breakers, right? If you trade breakers, this is your entry. Come here. This is your entry or the high. I mean, the close that may not have picked you up. I ain't gonna hold you because it came right to the breaker. Anytime I'm right on the dot like that, it don't be picking me up. So that's your entry. right the first time. Right. So if you trade breakers, that's your entry, right? For the breaker, you're giving it to the low of the breaker, right? Mandatory, right? And then you're giving it to the safe is the low right there. The safe is the same for both of these, right? So for the break for the fair value gap, right? We're just going on the touch. That's your entry, mandatory stop below it, right? Below the bottom of the fair value gap, right? We're just gonna go to the low of it. We ain't gonna go to the bottom, right? We're going to the low of the fair value gap, and that's your safe. For your breaker, entry, mandatory stop, the low of the breaker, safe stop, the swing low from this price leg right there, right? OTE, right? OTE, right? We're gonna go with 62. Just put it close as I can to something right there. We're just gonna put it there. Right. I'm just trying to find something it can stick to. That's your entry, right? OTE, that's your entry, right? And then this right here is your mandatory and safe. That's your mandatory and safe, because with OTE, you give it to the bottom of the Fibonacci, right? You give it to the bottom of the Fibonacci. That's your mandatory and your safe for OTE. Wherever you anchored the Fibonacci at, that's what you give it to, the bottom of the Fibonacci. And then you know what I'm saying? That's your mandatory and safe. So it's just personal preference. There's no such thing as better. It's what you trade. It's all about knowing the draw on liquidity and not being greedy, not looking and saying, hey, if I got in on the breaker, I would have had more of a run. If I got in on the fair value gap, I would have had more to run. I'm cutting if I got in on this, I missed a good piece of the run. How you know you would have held it, right? If you'd have got right here, if you got in right here on that right there, how do you know this one has spooked you out? How do you know that one has spooked you out? How do you know this one, like it done came back at you one? You got in here, it done came back at you 1, 2, 3, 4, 5, 6 times. Now, mind you, now these hourly candles right here, right? Imagine sitting through all this right here. It's just coming back at you constantly. Coming back at you constantly. Man, anybody, I got spooked out of that. All right. I babbled enough on that. Hopefully that was helpful. Are you using OTE after retrace to the breaker already happened? In this case, yes. In this case, yes. It was a breaker. That was the confirmation move right here. Now, for some people, it might have been the fair value gap. That was the confirmation move, right? It could be coming back down to an order block right here and then taking back off. Whatever the confirmation is leaving, right? That's when you want to start looking for your OTE, right? Because the you can get an OTE. Like if we would have come back down to this fair value gap right here, I'm pretty sure that would have been an OTE entry. Let's check it and see. Get out the way. Let's check it and see. Right. I'm going to go to the high. Right. If we come back down to that fair value, yep, right there. See that? If we would have came back down and filled that fair value gap, that would have been an OTE entry right there. Right. Now I told you can get the OTE on the retracement back. Right. You can get the OTE on the retracement back. But in this case, looking for the OTE here, ain't nothing wrong with it. But in this case right here, you're better, sir. I personally only look for OTE after the confirmation move, right? Because once you get the confirmation move, that's when the OTE comes into play, because it's no longer really all about the PD arrays. It's like now the algorithm has started strategically placing PD arrays and imbalances in strategic spots on the lower time frames that it remembers it has to go back to. and they happen to fall within that optimum trade entry range. So on your time frame, you probably won't even, like I said, you probably won't even see what it's coming to, right? You probably won't even see what it's coming to. Let's go to a lower time frame and see where it went. We're just going to put this here at the bottom of that right there. And we're going to see over here where it went to. What did it go to? Right there. Let's go down to 15 minutes. Right. So we go down to 15 minute, right? On a 15 minute, it came all the way down here into an order block right there. Right. So on the 15 minute, this came all the way down into an order block. We filled in this fair value gap, came to an order block. Let's go to 5 minute. What did it do on a 5 minute? On a 5 minute, same thing. Came down here to an order block right there. Came down into an order block right there. You can, if I'm not looking at the big one, I'm looking at this little one down here because we got a green candle in between, right? Came down to an order block. Let's go down 4 minute. What do we come to on the 4 minute? Right? 4 minute didn't come to anything. Right? Then come this revisited a reclaimed order block already. This one already had been reclaimed. Nothing to write home about on the 4 minute. Right? Nothing to write home about on the 3 minute. Also. All right. So let's go all the way down to the 1 minute. See if it did anything special there. Yep. Nothing to write home on the 1 minute. Right. So it was on the 5 minute where we went down to the order, 15 minute and the 5 minute. We went down to an order block. Right. So the algo strategically set a 5 minute and a 15 minute order block in a strategic place that happened to line up with it coming back down into OTE. So it's all about the algo is going to strategically place this stuff in these OTE ranges, but that's going to happen after the confirmation of the move. You hear me? In my opinion, do what you see the best. Hold on. In my opinion, do what you see the best. I see OTE. So that is one of my trades. I do not use breaker, but I use the tools that come easy to my eye. Okay. Yeah. I don't know if I read it bad or you typed it bad, but yeah, I get the gist of it. Use what comes easy to your eye. There's no such thing as a best. There's no such thing as a best. Yep, agreed. Aaron. Took me a year to figure it out and figure that out. Exactly. Took me a long time to figure that out. DR was my edge with OTE. That's what I'm talking about. Praise him. You're very welcome. That laughter means you typed it wrong. That's all I got, man. Do anybody got anything else for me? Does anyone have anything else for me? Shout out the new addition to the family. You're welcome. You're welcome. And dig this, man. Dig this. This wasn't just about OTE, right? This wasn't just about OTE, is just what happened to pop to my mind. This is for any, you see how when I just was answering Michelle's question, you see how I went through and showed fair value gaps and breakers, right? You see how I went through and showed fair value gaps and breakers, right? We did a fair value gap entry, we did a breaker entry, we did an OTE entry, right? So everything is based off of the draw on liquidity. What's the draw? Ignore your feelings and your wants. What's the draw? And once you figure out the draw, right? Once you figure out the draw, the draw is always going to be based off a higher time frame than you're entering, right? If you're entering on an hourly chart, your draw is going to be based off a daily. If you're entering on a 5 minute chart, Your draw is going to be based off of an hourly or a daily. If you're entering on a 1 minute chart, your draw is going to be based off of hourly or 15-minute. You know what I'm saying? Preferably an hourly. Anything lower than an hourly when it comes to a draw, you're going to see a bunch of chop. If the draw is like that short, you in chop city, man. Chop style, chop, chop, man. So yeah, man, that's it. I don't see nothing else in the chat. So hold on, I do. So on the 1 hour chart that you showed, what was the draw on liquidity? Michelle, was you not here? Was you not here? Are you driving? Are you driving again? Are you driving and watching? The draw on liquidity. When we came down, right? We talked about here, right? We said once we accumulated shorts up here, we came all the way down. And when we got below these lows, it was apparent that we offset our shorts and started accumulating longs because we got the pang out. Whenever we hit liquidity, and then we said if we hit liquidity and we reject off the liquidity, be it a high or a low, the high or low that sent you here is now the draw, right? This high sent us here. So now we get this rejection here with this breaking market structure. So now the draw is up there. And if you look, if we put us a line over here on this high, get on the high, we took it. Do you have to take it? No, you don't. Because that's where shaving points come in. We came up and took out this right here. We come back down. If we get in at this right here, right? That spot right there, that can be a place to shave, right? Every time you pass a high, you can be shaving, depending on how important that high is, right? That you can shave at this high, that if you want, or you can shave at this high, then you can shave at that high, then you can end at that high. It depends on whatever you feel is the most important spot. Anytime you pass a high, you can start shaving, because anytime you break a high, there's always a chance of a retracement or a reversal. So you want to protect your profits. Protect your profits. Don't be greedy. Protect your profits. Don't be greedy. See, Walker, if you just came in here, you missed everything. Hear me. Oh, I was here for the pang out. I miss you saying the draw on liquidity was the high before the pang out. Thanks. No, anytime you I didn't say it specifically. All I said was anytime you reject liquidity, the high or the low that sent you there is the draw, right? So this is the high, right? We came from this high and we offset down here. So this is the high that sent us here because we accumulated the shorts here. And then when we got down here, we said, hey, it looked like we just offset our shorts from up here. There's a lot of displacement going on here. I mean, there's a lot of distribution going on here because we got this heavy displacement to the upside. So this high came down and took out that low, and then we rejected it off of it. So since we rejected off of this low right here, and this high sent us here, whatever high sent you to this low, that's now the draw. So that's your draw on liquidity right there. Do you have to get there? No, you don't. 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 Anybody got anything else? I can talk about this all day. Your questions don't bother me. I may sound a little harsh at times, but I LOVE everyone. Anything else in the chat? Nothing else in the chat? You're very welcome. You're very welcome, Michelle, my belle. Michelle, my belle. Okay, that's it. I don't see nothing else in the chat. Thank you, thank you, thank you. Thank you, thank you, thank you. I thought I wanted to say something, but I guess I don't. You're very welcome, Dabra. You're very welcome. Everybody, enjoy your weekend. Yes, Angela, have a great weekend. Everybody enjoy your weekend. Um, yeah. Yeah, that's it, man. Have a great weekend. The 4th is on. What day is the 4th on? The 4th is on a Tuesday. So the beginning of the week is going to be holiday-ish for trading. I think it's going to be like Sunday evening. I think like half a day on Monday. I think it's going to trade until like 12. It's going to be closed on Tuesday. And then it's going to open up like Tuesday night and trade through Monday. So just chill out. Just chill out till Wednesday. Just chill out till Wednesday. Because it's just going to be like weird holiday hours this week. Yeah, just chill out till Wednesday. If you are a consistently profitable trader, if you are a consistent trader and you are thinking about throwing your hat into the prop firm world, I have a link down there for Apex. That's the company that I chose to deal with. So if you want to give Apex a try, use my link. They're having 90% off all the evaluations right now. So if you click that link, just change it to save 90. I'm not going to be changing the link. That link is only for like 50% off. But when you go there, change it to save 90 and then save 90% off any evaluation that you buy. Again, do not go and try to take a prop firm evaluation just to gain more capital. Only trade evaluations if you are already a consistent trader and you're just looking for an extra way to add an income stream. Don't go out there trying to learn how to trade with real money because some idiot told you you have to put skin in the game. You don't have to put skin in the game. Learn the techniques, become consistent, and then make your attempt in the prop firm land. Other than that, enjoy your weekend. I thank y'all for pulling up, hanging out with me. You ain't missed nothing. We ain't talked about nothing. We actually just got on. We actually just about to start. Hey man, y'all enjoy y'all weekend, man. I appreciate y'all for always tapping in, man. Big Spider gone.